Hey everyone, it's Kenton Becker with American Pacific Mortgage. I'm coming to you again for the second part video on a topic of down payment. Now, if you remember in the last video, I talked a little bit about, okay, should I wait? Should I do something now? Or should I wait a year, 2 years to save up 20% down or 15% down? And that's a good question. And generally, I said that doesn't make sense to wait because home prices are also increasing while you're trying to save up your money. If you didn't see that video, go back, watch that video. This video, I want to talk about specifically somebody who does have 20% down. Maybe they already have that money saved up or set aside in a retirement account or mutual fund of some kind. Does it make sense to liquidate that money, or does it make more sense to actually just do minimum down payment and get mortgage insurance? This question was actually posed to me by a real estate agent about a week or two ago. He had a client that asked this exact question. He said, I have money, I have 20% down that's in a retirement account, or actually it was a mutual fund, but I'm just not sure if I should liquidate that while the stock is increasing right now. He wanted to know if it would make sense to liquidate that and not have any mortgage insurance by putting 20% down, or if it made sense just to take mortgage insurance. Now, I penciled out the numbers, and what I found kind of surprised me as well, that it would actually make more sense for him to put a minimum down payment. Now, in his case, it would be 5% minimum down payment instead of doing 20% down and just taking mortgage insurance. Here's the way I kind of calculated these numbers. I said, okay, if his accounts, mutual funds, retirement accounts, whatever, we're gaining at 8% per year average. If he started out with, say, $75,000 in that mutual fund, at the end of 10 years, he would have around $150,000, or it would double after 10 years. If we look at if he just did minimum down payment, though, and didn't liquidate that money, how much more would it add to his monthly payment? Well, number one, he's borrowing more because he's putting less down. So that actually added, I looked at it, about $300 a month to his monthly payment. Over the course of 10 years, that added about $36,000 to his house payment. Then I looked at, well, if he's doing less than 20% down, he's also going to have mortgage insurance. I added up what mortgage insurance would normally be, about $200 a month is what I guessed. Here's the thing with mortgage insurance on a conventional loan. It can fall off. It's not permanent. It doesn't stay with you. So it typically falls off after 5 years or so, depending on how the home goes up in value. If we figure 5 years of mortgage insurance, that may add another $12,000. So follow with me. His money sitting in his account would have gained $75,000. If he left that money there, it would cost him about another $48,000 is what we estimated. What I figured out is that it is better to leave that money in an account that is gaining interest and earning money than to use that money on a down payment right now. Now, if that money is just sitting in a checking and savings account, not gaining any interest, not gaining anything, well then yes, definitely pull that money, put more down, don't have mortgage insurance, have a lower loan, which means a lower monthly payment. But if your money is already gaining interest, it's in the markets, it's actually earning something, it probably doesn't make sense to liquidate that right now. With minimum down payment options of either down payment assistance, 5% down, 3% down if you're income qualified, there's options where you don't have to do 20% down. Now your numbers could be different. I'm not going to say this works for everyone. So anyway, I just wanted to bring you a video about waiting or buying now. This video on if you have the money and now you're deciding if you want to liquidate your retirement accounts or mutual funds, a couple different thoughts. But thanks for joining me on this tip. If you have any questions, anything that you want to specifically look at in your scenario, shoot me an email. Give me a phone call, shoot me a text. Love to help you. I love to answer your question and just go through some of the numbers with you. Thanks so much for joining me on this week's tip. Have a great week.